Unlimited CEO Bob Elliott and Vital Knowledge founder Adam Crisafulli. Guys, great to have you here, especially as we do have large gains for all of the major averages. Bob, I'm going to start with you. How much hinges on this election now and the various outcomes we could see in coming days?
Well, I think we're going to see a lot of market volatility coming through with this election, given the divergences in the policy stances from both candidates. I think the really interesting question is whether the conventional wisdom that a Republican victory and sweep will be beneficial for stocks, given their policy position. Some of the indications today with bond yields coming down a little bit and stocks rallying at the same time suggests that maybe people think that split government with a Harris administration might actually be better for the economy and stocks than the conventional wisdom.
Yeah, I've been hearing that, and this whole idea of sell bonds, that's part of the so-called Trump trade as it's being perceived. Adam, want to get your thoughts on this, especially as we do see a stock market that is arguably priced to perfection here, and we have seen a lot of the volatility tied to the election actually in the bond market.
No, I think the election is going to influence markets in two key ways. I think directly bonds care much more, I think, than equities as to how things shake out, just given that as it pertains to the economy, the policy differences are most dramatic on fiscal policy. And so, like you just said, the quote unquote Trump trade, if you were to see a red wave, the fiscal implications of that would be very negative in that it would drive yields higher. And so if you do see a Harris split with Harris winning and the Republicans controlling at least the Senate, I think you'll see a big relief rally in bonds, which will then translate into gains in equities, coupled with just getting the election out of the way. We've heard from a lot of companies over the last several weeks on earnings calls about how election uncertainty has played a role in kind of softening demand in certain categories of products over the last several weeks. And so just getting out of the way, having any result known will be a relief for the market for risk sentiment. And if we do see a split outcome, ideally Harris in the White House, that I think would then help spark a relief rally in bonds, which could translate into equity gains.
And of course, we're in a week where we're talking about the future of fiscal policy, but also the future of monetary policy. We'll get into that in just a moment because we have our first earnings report out. It's Lumen Technologies and the fiber and telecom company reporting an adjusted loss of 13 cents per share. So this was a bit worse than estimates of 9 cents per share loss. Revenue of $3.22 billion. That was essentially in line. Q3 adjusted EBITDA, $899 million. That was light. Broadband subscribers, 2.6 million. That was largely in line with estimates on FactSet. Here's the full year 2024 outlook, though, for the company. That's increasing free cash flow to $1.2 to $1.4 billion. That's up from previous guidance of $1 to $1.2 billion. Other metrics, including adjusted EBITDA, those were reaffirmed. Lumen Technologies is positioning itself to provide connectivity to data centers and for this AI infrastructure build out. Stock has been seeing big moves this year due to that, particularly over the summer. Lumen announcing just earlier today it's partnering with Google Cloud to build digital twins, support other AI efforts, adding to a growing list of partnerships that also includes Amazon, Microsoft, and Meta. We're going to have more on Lumen's quarter and the outlook for AI in just a few moments when CEO Kate Johnson joins me before the company's earnings call. And you can see those shares of Lumen are jumping right now. Last I checked, up 6% here in overtime, presumably because of that free cash flow guide coming up as well, which is what happened in the last quarter, too. Bob, I'm going to come back to you because this has been the other piece of the story. You saw it in the markets today, the secular growth story that is AI. You've seen it in semiconductors and some of the results that continue to be bifurcated. You saw it with Palantir. You're seeing it here with Lumen. You saw it with Cummins as well today. Does that continue regardless of election outcomes?
Well, I think there's a pretty good foundation in terms of the AI trade continuing to generate pretty good free cash flow and earnings that we're seeing. And this earnings quarter has really confirmed that those AI-focused companies can continue to generate profits. And given the role that that's playing, not just in the specific names, but in the broader economy, that's supportive to the overall earnings picture. The question is, for the economy, is whether that's able to branch out beyond just the AI names, the Mag 7, and we start to get a lift in earnings more broadly, because that's really what the market is pricing in, is not just the high flyers, the AI names, the Mag 7, they need to see earnings growth from the rest of the economy. That's what's expected. That's what's priced in. But given the strength of the economy, remember, a strong services PMI print, we continue to get strong data across the economy. That certainly seems very possible given the strength that we're seeing in the underlying economy.